What's up, you guys? I'm going to tell you exactly how to buy your very first home or your first rental property in 2020. Let's jump in. So like I said, whether you're looking to buy your very first home or your first rental property this next year, I'm going to give you a couple of steps here that you can take right now and get started on so that you can make that reality over the next 12 months. We're coming up on the end of 2019 right now, so if it's your goal to buy a home in 2020, I want to help you make that a reality. If you get started on these steps right now, I bet that you could do it sooner than later. So we're going to break this down into 5 actionable steps, so make sure you watch all the way to the end. Number 1 on our list is to get educated. You have to be educated about how the home buying process works so that you understand what you're getting yourself into. It's very similar to just buying anything, right? You go out, you exchange money, and you get something in return. That's how buying something in our society works. Buying a home is very similar, but you really want to make sure that you pay attention to the details because this is what's going to keep you out of getting into a dangerous situation or losing money, but it can also be the difference of making a lot of money on a good real estate investment purchase. The first thing I want you to do is get familiar with interest rates, right? How do the interest rates work? How do they fluctuate? When are they up? When are they down? What's a good interest rate versus a bad one? And how do they fluctuate based on the type of loan that you're getting? You're going to have different interest rates depending on whether you go conventional or you go FHA or VA, USDA. There's so many different loan types. So you really want to make sure that you've got a pretty good idea of what those interest rates are right now. You want to follow them over the next couple of weeks or even months until you do get to that point where you're ready to buy. That way you can know if they've gone up or if they've gone down. Getting a low interest rate, of course, as always, is the most important thing, and having a high credit score is going to help you get the best interest rate possible. The other 2 things that I want you to get educated on are what are the property taxes in your area and what is the estimated homeowner's insurance. These numbers are going to vary based on where you're at. You know, if you're in a state like Illinois, you're going to have really high property taxes, whereas if you come out to the Midwest, your property taxes are going to be relatively low compared to those other states. So you want to know what an estimate is on property taxes. This is really easy to do. You can just pull up some houses that are for sale on your local MLS and look at what the property taxes are and kind of break it down based on how big the home is, where it's at, how old the home is, and some of those other details. So get familiar with what those property taxes are so that you kind of know what to expect of what you're going to pay on a monthly basis. The other thing too is the insurance. You want to know what your estimated homeowner's insurance is because as the home gets more expensive, typically it's more expensive to insure, right? So you want to know exactly how much you're going to be paying on insurance so that you can calculate that into your monthly payment. And last but not least, try and learn as much about the process as possible. Figure out what your monthly payment is going to be, figure out what you're comfortable with for that number, and just get an overall education of how this process is going to work. There's a lot of details that will need to be worked out, but you're going to have help along the way, so don't worry about that too much. But the more that you can figure out ahead of time, it's going to really help you out as you get into this process and prevent any surprises from coming up. The second thing on our list that you're going to want to find out when it comes to buying a home is what kind of home do you actually want. There's a lot of different types of homes. You've got condos, townhomes, single family homes, duplexes, fourplexes. There's so many options out there, and so you really want to get crystal clear on what type of home you're looking for. I'm a real estate investor myself, so I'm going to come at this from the perspective of making this real estate purchase an investment for you. You might want to consider house hacking. If you don't know what that is, go ahead and check out my video right up here. I'll link to it. It's a really powerful method of using real estate to cut down your mortgage or even live for free. This is exactly what I did, and it absolutely changed my life. So I recommend that you at least check it out and see if it's something you're willing to consider if you're looking to make this a long-term investment for you. It can really set you up on the right path. So you want to get crystal clear on what it is you are actually looking for, whether it is a condo, maybe you're looking to live right downtown and that's where the condos are the cheapest. Maybe you're looking for a townhome, you don't mind having some neighbors, but you do want a little bit smaller space. Those are typically cheaper as well. Or maybe you want to go for the full single family home. You want the white picket fence. You want the fenced backyard for the dog. If that's what you want, that's totally fine. Just make sure that you get clear on what you're looking for and kind of what to expect when buying that. You might even want to consider something that's a combination of a few of these items. I personally bought my very first house. It was a townhome, and I used it to house hack. I got a couple of roommates, and they helped pay for my mortgage. After that, I moved into a single family home, but it had a mother-in-law apartment or an accessory dwelling unit, ADU, that I rented out to help cover the mortgage that I had. I've done this a few times now, and I'm actually still doing it, and it's been absolutely instrumental for me to be able to get ahead and get to the point where I'm now at. The next thing that you want to do, number 3 on our list, is to get your finances in order as much as possible. There's going to be a lot of moving parts that go into this as you get more active in the actual home search, but you want to make sure that everything's lined up so that if that perfect home comes up on the market or interest rates drop significantly, you can pull the trigger on a home as soon as possible. The important thing that the banks are going to be looking at here is what is your income versus your debt each month. The banks really aren't too concerned with what you spend on groceries or gas or any of those other, variable expenses balances that you have each month, they want to know what's going on your credit. So this could include things like other mortgages you have, car payments, student loans, medical debt. Anything that reports on your credit is what the banks are going to be looking at. Now, depending on what type of loan you go with, that percentage is going to vary based on how much the banks will actually allow. They want to see that your income is enough to cover your debts that you already have, plus your future expected mortgage payment. One of the biggest things that I see with this that most people get wrong is that the banks really don't care what your balance is on that account. They just care what your monthly payment is each month. So if you've got a car payment and you've had it for 3 years, the banks really don't care that you've had it for 3 years. They don't care that maybe there's only $3,000 left owing. If it shows that you owe $700 a month on your car payment, that's what they're going to take into consideration for your debt to income ratio each month. So what I'd recommend in this situation is to actually go out and refinance your car. Even if you only owe a couple of $1,000s, you can refinance that car and significantly drop your payment, and that's going to really help you when going to get pre-qualified with the bank or with the mortgage broker. The other thing that you might want to look into if you've got an interesting situation or you're trying to get a little bit more savvy is moving money around. Sometimes it makes sense to move a car loan into somebody else's name. Sometimes you want to pay off a credit card or move that balance to a different credit card. There's a lot of different ways to look at it, and it's going to vary from case to case. So you do have to get a little bit savvy and understand what they're looking for and really maximize what type of interest rate they're going to give you, how low you can get your fees, and of course, how low you can get your payment or how much you can qualify for. You really just want to get educated with this, because if you can move around money to work in your favor, this is going to help you qualify for a little bit more on your home, or it's going to help bring down your interest rate and your closing costs. One other really simple thing that you can do that a lot of people overlook is work full-time at your job. If you're on an hourly pay schedule, you want to make sure that you're clocking in those 40 hours every single week for at least a couple months before you're actively going to be looking at homes. The banks can get a little bit picky. Even if you say you work full-time, but your pay stubs only show, let's say 35 hours, they're only going to give you credit for those 35 hours, even if you just had, you had to leave work early one day or something. So really make sure that you're putting in the time to show that 40 hours every single week. Also, when it comes to getting your finances in order, look into no money down programs. Not having access to a down payment is probably the #1 reason why people don't buy real estate sooner. Having a down payment is incredibly important, and it can really help you with bringing down your interest rate and getting you a better deal on the house, but don't let that hold you back from just getting started. It can be really tough for people to build up a down payment, and it can take a lot of time. So what I want you to do is look into no money down programs or very low down payment programs as well. If you go with USDA or VA, if you can qualify on one of those loans, they do have no money down options. There's also a lot of city and state programs that don't require a down payment either. They are typically going to have a little bit higher fees and a little bit higher interest rate, but in most cases, it's going to be worth it to get into a home, even if you have to start with one of these programs, and start building up that equity, get into a better financial situation, and then refinance a little bit later on down the road. Just be careful not to let this hold you back. Look into these different programs or grants to see what options are available for you. Up to this point, you've gotten educated about how the home buying process works, you've determined what type of home you're actually interested in, and you've put your finances in order as best you can. At this point, it's time to talk to an expert. The next step in this process is to get more familiar with how the lending actually works on buying a home. Now, when it comes to talking to lenders, there's 3 different types that I want to categorize for you to consider. Each of them are going to have different pros and cons, and we're going to break it all down for you right here. For the 3 different types of lenders that are out there, I'm going to categorize them as big banks, small banks and credit unions, and mortgage brokers. We're going to start with big banks. These are going to typically include companies like Chase, Wells Fargo, Bank of America, any major banking institution here in America. That's what's going to be considered your big bank. Some of the pros that you're going to get by doing this is that you may already bank with them, so it'll be easier for them to look at your financial documents. The other thing that can be really good with big banks is they're typically the ones that are lending you the money directly, right? They're lending it out of the deposits that they've had, and so they can offer you a little bit better terms on the loan that they're going to give you. The downsides to using a big bank is that it's not going to be a personal transaction. You're going to walk into the bank, they're going to take your information and process it, and they can get the job done, but you're really just kind of another number to them. Another negative to doing it this way is that they're going to be slower, right? Typically these big banks, they work on 9 to 5 schedules, so you have to submit your documents and get in touch with them and get this process rolling during that time in order for it to move ahead. Now, in most cases, this is doable, but you might run into instances where it's just really hard to get time off of work if you're also on that schedule to go and meet with somebody or to get something submitted that they may need. So if you're going that route, just anticipate that it is going to be a little bit slower of a process and it's going to take more time for the bank to process your loan. The other negative thing that I want to point out is that typically these bank employees are paid on salary instead of commission. So they really don't have an incentive to help you get the loan. They're just doing their job, because whether you actually get the loan or not, they're going to get paid either way. This can act as a negative because you don't get the same incentive from the person that's helping you at the bank to actually help you get qualified and get the best deal possible. Next on our list, I want to talk about the smaller banks and credit unions. Typically, these smaller banks and credit unions, they do have funds that they will lend you, but a lot of times they're acting as kind of a middleman and they're just brokering the deal and setting it up for you. And then they know that they're going to sell that loan off to another bigger bank to actually hold the mortgage and service it. A lot of the things that we're going to list out here are going to be the same as you would find with a big bank, but there are some other advantages that you may want to take into consideration. A lot of times with these smaller banks and credit unions, you can get those same great terms because the bank is working with you directly and they may actually end up holding the mortgage. This is something that you would have to ask them. Sometimes they do, sometimes they don't. It just depends on what type of loan product you're going for and what the bank decides to do with it. Now, when it comes to loans, there's generally a few different major types of loans that are given to consumers, and most of the guidelines for what it takes to qualify are the same across the board, regardless of which bank you use and regardless of whether it's a credit union, a small bank, big bank, or a mortgage broker. In most instances, they're going to follow these same exact guidelines regardless of who you use. But when it comes to smaller banks and credit unions, they do have a less common option, which would be called a portfolio loan, that's going to have its own guidelines that they determine to lend on. These smaller banks and credit unions can set up their own guidelines for what they require in order to lend you money. This can give you more flexible terms if they're happy with the financial documents that you provided. These portfolio loans can really be beneficial, especially if you're in a unique situation. Maybe you're self-employed or you just got out of college, or there's some other thing that's holding you back from getting one of those traditional loans. A portfolio loan can be helpful for you. When it comes to these smaller banks and credit unions, a lot of the negatives are going to be the same as you'd find with the big banks. The employees are typically going to be salaried, so they don't have that same incentive to help you get the loan because they get paid whether you get it or not. These banks are also typically going to be slower because they're on that same 9-to-5 schedule and you have to work around their schedule and with them. Also, because they're so popular, these banks can take a little bit longer just because they have so many loans that they're actually processing. The third type of lender that we're going to talk about here on our list is going to be a mortgage broker. Now, in my opinion, if this is your first home or it's your first investment property, this is the route I would go because you're going to get a very high level of expertise and you're going to get a very hands-on experience. That's going to be our very first positive to using a mortgage broker. A mortgage broker is typically just somebody who's working as a middleman to broker the deal between you and the bank. So they've got the relationship with the bank and they're offering those terms to you and they're acting as the middleman to set all of that up for you. They're not typically the ones that hold the loans. They're simply setting it up and selling it to the big bank after it's all been complete. Mortgage brokers are typically very specific about the rules and they follow them to a T because that's what the bank is going to require in order to take over that mortgage once they've set it up. So like I said, using a mortgage broker, it's going to be a very hands-on and personal experience for you, and that's our first positive. The other thing that I want to point out as a positive is they typically have access to multiple banks. Like I said, different banks will offer different programs from time to time. So using a mortgage broker, you can tap into a database of different loan programs that may fit your specific situation. This can be a benefit for you because if you're in a unique situation, it can help you actually get qualified, whereas in another situation, you might not be able to. Now, brokers do typically have the incentive to help you get the loan because they're getting paid on commission. They only get paid if you actually get the loan and buy a house. This is a positive, and that's why I've added it to our list here, but it can also become a negative because of the fact that they're getting paid on commission. They do typically have slightly higher fees in the form of closing costs or a slightly higher interest rate. The other positive thing that I want to point out here is that they're typically the fastest of all. So if you've got a deal that needs to go through really quick or you just want to get moved in because you're excited, going with a mortgage broker is typically going to be your fastest method to do that. So other than paying a little bit more on your interest rate or your closing costs, that's really the only downside to using a mortgage broker, in my opinion. If it's your first time or it's your first investment property, I think that going with a mortgage broker is going to be the best option just because you're going to get a very high level of service and it's going to be a better experience for you in most cases. Now, I'm not saying that banks are necessarily a bad thing. I've used banks myself, but you just want to make sure that you've got the right expectation going into the process so you know how long it's going to take, what level of service you're going to get, and kind of what to expect along the way. Last but not least is to talk to a local real estate expert in your area. If this is your first time or it's your first investment property, I highly recommend the use of a real estate agent because they can really help you figure out the ins and outs of the process and make sure that you're protected along the way. The key to this whole thing is making sure that you've got a realtor who really knows what they're talking about and does a really good job. The value of a real estate agent comes in the form of their experience and their connections, as well as their ability to negotiate for you on buying your home. You want to make sure that the real estate agent you use knows the area that you're looking in and knows the type of home that you're looking for. You want to vet this real estate agent to make sure that they know what they're talking about. A couple of different ways that you can do this is to go to Zillow.com and actually look at their past history. Look at what areas they've sold homes, look at their past reviews, look at how many homes they've sold in the past 12 months. There's a lot of information that you can find here that will be helpful for you in determining if they're the person that you want to work with. Most agents out there are only selling a couple of homes a year. So if you've got an agent who's selling 10 or more homes per year, you know that you're starting off on the right foot. You can also use other sites like Google, Yelp, or even Facebook to look at their reviews and get more information about them. If you're looking at buying a rental or something that you're going to use strictly as a real estate investment, you want to make sure that the real estate agent knows what types of numbers you're looking for and how to calculate those numbers during the home buying process. I would ask your real estate agent if they own rental property of themselves, if they've ever flipped homes or done anything that's outside of just your traditional buying and selling of real estate. This is going to be really helpful for you because when you get into calculating things like cash on cash return, determining if something's a good deal or not, the internal rate of return, or any other factor that you're going to be looking at when it comes to strictly the numbers, you want to make sure that the real estate agent understands that for themselves and then can also guide you with their expertise when it comes to that. If a real estate agent can't calculate these numbers for themselves, they're probably not going to be able to give you accurate information on what makes a good rental or what makes it bad. The other thing that you want to keep in mind is that you are the one that's hiring the real estate agent. You're the one that's in control and you're hiring somebody for their service. This is very similar to how you would go out and hire an attorney or go see a doctor, right? You're the one that's in control and you're there to vet them on their experience and their knowledge to help you through this process. So don't be afraid to go and interview 2 or 3 different agents or even just talk to them on the phone. Go and do this and talk to multiple agents to get a feel for their personality, their experience, their knowledge, so that you can make sure that you've got the right one for you. But I will say that once you've decided on a real estate agent, make sure that you stick to them and you're loyal with them and you're not just playing games by working with multiple agents at the same time. Once you've decided on a bank and a real estate agent, it's time for them to finally guide you through the rest of the process of buying your very first home or investment property in the year 2020. I hope you guys enjoyed this content. If you did, please consider subscribing to the channel, give me a thumbs up here on the video, and drop a comment below with your thoughts on the process. Follow me on Instagram at @UtahRealEstate_. I try to post there often and I'd love for you to be a part of it as well. And until next time.